Let me ask you something. Do you remember when the Royal Atlantis was launched back in 2017-18? At that time, units were going for just 83,500 to 4,000 per square foot while it was still under construction. Many investors thought it was overpriced because they focused on the number, but they missed the real value behind it. Now, fast forward to 7 years today, those same units are trading between 8,000 to 11,000 dirhams per square foot. Now, that's a 2 to 3x capital appreciation, and that's without even counting the rental income. Now, why did that happen? Because the Royal Atlantis was not just another luxury project, it was a landmark that redefined luxury for an entire era, the kind of creation that does not come around often. Iconic location, visionary design, global branding all coming together to create something truly irreplaceable. It became a trophy asset, and as a result, the capital appreciation followed naturally. Now, imagine the same formula, but instead of a luxury real estate product, apply it to the commercial real estate sector. Now, that's what Lumina by Omniyat is. Now, in this video, I'm going to break down why Lumina by Omniyat might be the most valuable commercial real estate investment of the next decade. We will cover how it compares to iconic buildings, what makes its office sizes so powerful for long-term ROI, and why Lumina's location, tenant appeal, payment plan, and prices creates a rare opportunity for serious investors. So whether you are an end user, a portfolio builder, or an institutional investor, this is a project you will want to understand in full. Let's get into it. Let's start with the developer first. Now, talking about the developer, Omniyat is Dubai's most prestigious luxury real estate developer, known for creating architectural landmarks that blend art, design, and functionality. Founded back in 2005, Omniyat has delivered iconic projects like the Opus by Zaha Hadid, Dorchester Residences, Dubai Villa by Omniyat and Business Bay, Awa, and one at Palm Jumeirah. Now, the brand is synonymous with ultra luxury, attention to detail, and visionary concepts, often partnering with world renowned architects, designers, and hospitality brands. Now, with a track record of redefining high-end real estate in Dubai, Omniyat brings legacy, credibility, and trust to every project it launches, and Lumina is no exception. Lumina is not just another office tower. It's a landmark in the making, a commercial trophy asset that's going to shape Dubai's next business skyline. So, what is Lumina? Lumina is being built for the top 1% of the tenants and investors, a 48-story, 260-meter tall commercial project with just 91 exclusive shell and core office units, and it's packed with ultra-premium features. Now, before going into the features, let's start with the location first because Lumina has a huge edge over here. Lumina is located right on Sheikh Zayed Road, the main artery of Dubai, and directly opposite to Business Bay metro station. Now, that kind of visibility and access is very rare. Now, if you have dealt with Business Bay before, you know traffic and parking are ongoing challenges there. But Lumina solves this completely. You have got smooth entry and exit, metro access literally few steps away, high-end cafes and dining options within the building, and over 1,000 parking spaces just for 91 offices. And with valet services and VIP drop-off zones, you have got a seamless arrival experience for executives, staff, and clients. So what does that mean for your business? Shorter, stress-free commutes, easier access for both clients and teams, fewer daily operational headaches, stronger tenant satisfaction and retention. And for investors, that translates to better yields and stronger long-term asset value. Now let's zoom into one of the most underappreciated strengths of Lumina, the size of the offices. Here, office sizes starts from minimum 4,000 square feet and goes up to 16,000 square feet, which creates a superior value compared to standard buildings starting from 700 to 800 square feet offices. Let's understand how. Most global corporations, investment firms, family offices, high growth businesses don't operate out of 700 square feet or smaller units. They need office or bigger space for teams, meeting rooms, executive offices, collaboration zones, and etc. Now, this kind of tenants are financially stronger, stay longer, and are willing to pay a premium for brand image and functionality. For example, a multinational firm looking to lease 10,000 square feet would not want to deal with 15 separate title deeds across 700 square feet units. They prefer consolidated and efficient layouts. Now, in Dubai, very few freehold buildings offer grade A offices above 4,000, 5,000 square feet in a luxury setting. Most investors buy small offices, which creates a crowd crowded, commodity-style market with higher turnover and lower brand value. Lumina's size range makes it one of the rare options for businesses seeking full floor or half floor identity. Now, larger trophy offices are limited in supply but high in demand among ultra high net worth individuals, sovereign funds, family offices, and big corporates. This kind of investors don't want to compare in a small office bracket, they want luxury and exclusivity. When reselling, you're not targeting general buyers, you're targeting elite buyers. Now, that scarcity drives capital growth over time. Leasing one large 10,000 square feet office unit to a corporate client often results in higher total rental income and lower operational hassle than leasing 12 small units to a different SME. Now, there's a less churn, fewer fit out changes, and longer lease agreements, often more than 3 to 5 years with escalation clauses. Plus, large tenants often do their own premium fit-outs, which improves the value of the asset over time. While smaller units are more liquid in terms of volume, they are also more price sensitive and subject to competition. In contrast, luxury office assets like Lumina appeal to a very specific buyer class, and when demand comes, they are willing to pay a premium because alternatives do not exist. In simple words, while small offices compete on price per square feet, projects like Lumina compete on exclusivity, size, prestige, and long-term ROI. Now, let me walk you through few project features and why they matter. Now, as I mentioned, there are only 91 offices in the whole project. So that's like flying a first class in Emirates. No crowding, higher privacy, higher prestige, and limited supply in this specific category. Imagine it's 9 a.m. and you are heading to your office on 40th floor. In most of the high-rise commercial towers, you would be waiting approximately 10 to 15 minutes for a lift that stops nearly at every floor. It is frustrating, inefficient, and a poor first impression. Delays during peak hours are a known issue. But at Lumina, the double-deck passenger lift system is designed to eliminate that, ensuring time isn't wasted in transit and business moves at the pace it should, which means less waiting time, faster vertical transport, more efficient movement of people during peak hours, and a smoother and more professional experience. Especially important if your office is hosting clients, board members, or high-level executives. Now, apart from that, Lumina is located just a few steps away from Business Bay Metro Station, bang on Sheikh Zayed Road, providing seamless connectivity to the rest of Dubai. For example, employees who rely on public transport can enjoy quick, hassle-free commutes without worrying about traffic or parking. Now, this accessibility not only improves punctuality and productivity, but also makes the building highly attractive to top talent and global firms for convenience and sustainability. Now, apart from this project is targeting platinum pre-certifications across 3 global standards: LEED, WELL, and Wired Score, which is a big deal. Now, these aren't just industry buzzwords, they actually have a real and practical value. So, LEED Platinum means the building is designed for maximum energy efficiency, so tenants save on electricity and water bills, and the carbon footprint stays low. WELL certification focuses on health, better air quality, lighting, water filtration, and spaces that support employee well-being and productivity. Wired Score Platinum guarantees top-tier digital infrastructure, meaning ultra-fast internet, smart building system, and seamless connectivity. Together, these certifications future-proof the building. And in today's market, ESG-conscious firms, especially global companies, actively prefer or even require buildings that meet these standards. Apart from that, having a curated retail and dining options within the building is not just a convenience, it's a strategic advantage. For tenants, it means staff can access high-quality cafes, restaurants, and essential services without leaving the premises. That saves time during the workday, improves productivity, and enhances employee satisfaction. For businesses, it allows them to host client meetings, casual lunches, after-hours networking, all within a premium setting. And for owners, this translates into higher tenant retention, better leasing appeal, and more vibrant, self-sustained ecosystem, which ultimately adds value to the asset. In short, it's more than just F&B. It's about creating a lifestyle-driven commercial environment. Apart from this, private terraces and sky garden. Now, private terraces and sky gardens are not just aesthetic features. They serve a functional purpose in today's modern work culture. Private terraces and landscape sky gardens provide open air spaces for informal meetings, creative brainstorming, or even quiet breaks during the day. Now, having executive wellness suite and sky pool in the project goes beyond just fitness. It reflects a deeper commitment to employees' well-being. Now, today, top-tier companies actively seek work environments that supports health, balance, and performance. Now, Lumina's high-performance gym and sky pool offer exactly that, promoting physical wellness, reducing burnout, and boosting team morale. For tenants, it's a major value add, and for owners, it translates to higher demand, long lease durations, and premium rentability. Because wellness is no longer optional, it's a workplace priority. Now, Executive Business Club and one of a kind Sky Theatre in the entire region where functionality meets prestige. With dedicated boardrooms, co working zones, and one of a kind Sky Theatre where tenants can host high impact presentations, investors' briefing, product launches, private events, all within their office tower, which eliminates the need for external venues, enhances operational efficiency, and elevates the corporate image. For businesses, it's about convenience and brand presence. For owners, it adds exceptional leasing appeal because you are not just offering office space, you are offering a fully equipped business ecosystem. Apart from that, the private owner club. Now, think of the owners club as a private members only lounge within the building, designed specially for top tier investors and business leaders. Now, for example, imagine a sovereign wealth fund executive meeting with potential partners or a CEO hosting a small networking event without leaving the building. Now, this exclusive setting fosters meaningful connections in a redefined atmosphere, adding real value beyond just the office space. Now, such spaces enhances the prestige of the property and create opportunities for collaboration that can benefit both tenant and the owners. Lumina also features advanced smart systems that monitor and control lighting, air quality, energy use, and more, all seamlessly integrated for optimal efficiency. For example, if you are an overseas investor or a busy landlord, these systems ensure your property is well maintained without needing a constant hands-on management. Now, this means lower operational headaches, reduced costs, and a hassle-free ownership experience. Now, having over 1,000 plus dedicated parking spots is a significant advantage, especially in Dubai, where parking shortages are common in commercial areas. For instance, tenants and visitors will not waste time in searching for parking or pay extra for external spaces. This convenience will boost employee satisfaction and client experience while also increasing the property's long-term value and appeal. Lumina offers a dedicated valet parking and VIP drop-off areas, which will elevate the arrival experience. For example, executives and clients can be greeted and assisted immediately upon arrival, ensuring a smooth, convenient, and a prestigious entry, perfect for high-profile meetings or important events. Now, this level of services enhances the building's reputation and adds a premium touch that differentiates it from typical office buildings. Now, let's talk comparisons. If you are in the market to buy a freehold commercial office in Dubai, your top locations or options really come down to GLT, Business Bay, Downtown, and EFC, right? Now let's start with GLT. The most premium office tower in GLT is Almas Tower. It is definitely a well-known address and in demand, but it is not the ultra-luxury segment and certainly not comparable to a project like Lumina. Now that said, due to limited supply and strong demand, resale transactions are currently happening between 4,500 to 5,500 dirhams per square feet, and rental income is in the range of 400 to 500 dirhams per square feet, which brings in a solid 8 to 9% rental returns. So from an ROI point of view, Almas performs well, but it's a different product class. Then there's an SO Uptown, a mixed-use development by DMCC, which includes commercial offices, hotel, retail, and residential. But here's the thing, the commercial offices are not for sale, only available on lease. And the apartments are what's being sold. So if you are an investor looking to buy an office, SO Uptown isn't an option. Another developer called Swade and Swade launched a luxury grade commercial project in GLT2, but again, it's purely for lease. You cannot buy. And even though it has a high quality finish, there's still no direct comparison with Lumina in terms of scale, brand, or positioning. Apart from that, there is a project called Midore, an off-plan office project in GLT, currently selling units at around 3,500 dirhams per square feet. But again, while it may be attractive because of the price for some, it's not the ultra luxury bracket by any stretch. It's more of a mid-segment commercial play. Now, let's shift our focus to downtown. Let's say if you are looking to buy a commercial office here, freehold options are extremely limited. In fact, there are actually only three main choices: Boulevard Plaza Towers, Emaar Square, and of course, Burj Khalifa. Now, all three are strong addresses, no doubt about it. But when we talk about ultra luxury commercial ownership, there's no direct apple to apple comparison with Lumina, except maybe Burj Khalifa. And even then, the context is different. Now let's break it down. At Burj Khalifa, out of 163 floors, the corporate office floors are from 109 to 154th. Now that's 46 floors of commercial space. According to Property Monitor, only 4 resale transactions happened in last 12 months, which already tells you about the limited liquidity. Now, prices range from 84,000 to 11,000 dirhams per square feet depending on the level, view and size. Rents are currently between 550 to 650 dirhams per square feet. So yes, Burj Khalifa sets a pricing benchmark, but it lacks the modern and smart design of the next generation project like Lumina. It is iconic, but it's not a tailor built for the future commercial real estate. If we talk about Emaar Square and Boulevard Plaza, we are looking at a rental range anywhere between 300 to 400 dirhams per square feet, and the selling prices anywhere between 3,000 to 3,500 dirhams per square feet. Now, they both are quality, high performing projects, but again, not ultra luxury. They serve well established tenants, but you will not find the kind of curated amenities, smart tech, or executive level experience you get at Lumina. Now, let's talk about DIFC. Now, in DIFC, ICD Brookfield is definitely one of the most prestigious tower in the district. But there's a catch. It is leasehold only. So if you are an investor looking to own, it's not an option. Then we have Index Towers and Central Park Towers, both of which are freehold, but they do not offer the same architectural appeal, lifestyle amenities, or curated tenant experience like Lumina is bringing to the market. They serve the premium segment, yes, but they are not ultra luxury and they are not built as a statement assets. Even on Sheikh Zayed Road, if we look at, the freehold commercial supply is extremely limited. Only like 8-10 towers offer freehold commercials or mixed use office ownership. Most buildings offer small to mid-sized units, and very few provide large format premium office spaces, and there's no comparison to what Lumina offers. Now, Lumina stands out as the only upcoming ultra luxury large format freehold office towers on whole Sheikh Zayed Road. Now, Business Bay is where we really see the contrast. There are around 55 to 65 ready purely commercial office space buildings in total, but only about 8 to 10 of them can be called a true grade A offices. And even among those, very few offer any level of luxury positioning. The one exception in Business Bay is the Opus by Omniyat, a beautiful design forward building that stands out literally. But it's very important to note that Opus is a mixed use commercial project with offices, a hotel, retail and residences. And while it is one of the best commercial addresses in Business Bay, it is not a pure commercial tower like Lumina. Currently, in Opus, offices are selling between 5,000 to 6,000 dirhams per square feet and renting between 500 to 700 dirhams per square feet. But Lumina is aiming higher, not just in price, but in design philosophy, tenant experience, scarcity, and long-term value. Now let's talk numbers. Right now, grade A freehold commercial offices in Dubai are delivering net rental yields of around 7 to 9% annually. Now with Lumina's exclusivity, scarcity, and premium positioning, we are expecting 8 to 10% net yield post handover, and that's not an overestimate. That's a realistic conservative projection based on the market demand and tenant quality. On the capital appreciation side, most top tier commercial assets we discussed are growing at around 7 to 9% per year. Now, while Lumina is in the league of its own, there's no direct apple to apple comparison, just the limited supply and irreplaceable location gives it an edge. So if you hold the asset for about, let's say, 5 to 6 years post handover, you're potentially looking at around 50 to 70% capital growth, even in a conservative case. And when you combine that with rental income, your total return could reach 90 to 120%, effectively doubling your investments in 7 to 8 years of horizon. And here's where it gets even more attractive. Lumina comes with a 50-50 payment plan, 50% during construction spread over milestones and remaining 50% at the handover and end of 2029. So practically, a 50-50 payment plan is a very powerful tool for investors if that's being offered by a reputed and trusted developer. As you only pay 50% during construction spread out over 4 years, this means less money is locked and compared to paying 100% upfront for any ready property, freeing up capital to invest elsewhere or manage cash flow better. The remaining 50% is due at handover, which gives you time to leverage future rental income to pay the balance if financing. And the other option is to resell the unit closer to the completion on a decent premium and pass on the payment obligation. So since your total cash outflow is spread over time, the capital appreciation compounds year by year. So your effective return on invested capital improves significantly compared to paying all upfront. You're not putting 100% of your money into a future promise with only 50% invested during construction. You reduce exposure to potential market shifts or delays. Because you have paid only half, your injected capital is lower if you decide to exit early or flip near handover. Even a moderate price increase can translate to a higher ROI on your actually cash invested. For example, if you buy a unit for 25 million dirhams under a 50-50 payment plan, you're paying 12.5 million during the construction over 4 years, remaining 12.5 million is due at handover. Now, if the property appreciates just by 20% in the worst case scenario and reaches to 30 million in value by handover and you decide to exit, your capital gain is 5 million dirham, but your actual cash invested till that point was 12.5 million dirham. So that's a 40% return on invested capital. So in short, a 50-50 payment plan reduces upfront burden, increases capital efficiency, protects downside, and enhances the ROI, making it a smart structure for long-term investors. And Lumina is a very less speculative bet and more strategic bet on Dubai's ultra-premium commercial real estate, only if it can hold to completion. Now, practically speaking, I believe three things will drive long-term value to this project. First, scarcity of the product. As there is an extreme shortage of ultra-luxury commercial office supply across the entire Dubai market. Now, that kind of scarcity is what creates pricing power, especially at the handover and beyond. Second is Omniyat's proven track record. As this is not their first landmark, Omniyat has already delivered multiple architectural icons in Dubai. So that kind of reputation and track record builds buyers' confidence, especially among investors and end users who really recognize the quality and scarcity. Which means with Lumina, you're not just depending on general market growth. You're more likely to attract premium resale demand from buyers who see what this really is. Just like we are seeing today with the Royal Atlantis, where those who once questioned the pricing are now acquiring units at double or triple the original launch price. And the third, the design, location, and features of Lumina are built for a specific profile of users, high value and brand conscious businesses. That means stronger rental demand, better tenant retention, and ultimately higher ROI for investors. And finally, let's address the obvious, the prices. Let's talk about the price. So Lumina is launching at roughly 5,000 to 6,000 dirhams per square feet. Now, some might pause and say that's a lot for an office. But as I mentioned at the beginning of this video, Lumina is being built for the top 1% of investors. Investors who want to know what am I getting that no one else can get. Now, premium only feels expensive when the value is not clear. And with Lumina, you're not just paying for square footage. You're buying into something scarce, strategic, and future-proof. A 260-meter tall, 48-story architectural icon bang on Sheikh Zayed Road, built by Omniyat, which is Dubai's most prestigious luxury developer, with offices starting from 4,000 square feet, designed for global firms, not for general buyers, one of a kind, packed with wellness suites, executive lounges, one of a kind sky theater, and over 1,000 parking spaces just for 91 units. Now compare that to the rest of the market. Small offices and crowded towers, mid-segment builds with no brand, no amenities, no tenant prestige, and no long-term tenant pool. And when you actually look around the market, most freehold commercial options either don't offer this prestige and quality or simply are not available to buy at all. Now, just to give you some final perspective, Dubai has over 820,000 freehold residential units approximately as of today, including apartments, villas, and townhouses. But when it comes to freehold commercial office units, the number is just around 20 to 30,000 in entire city. Now that means commercial offices make up only 2 to 4% of the total freehold property market. And out of that small slice, very few are large format, premium grade spaces like what Lumina offers, that too with many limitations. So when I say Lumina's 91 offices are rare, I'm not exaggerating. In a city full of homes, office ownership is a niche and ultra commercial ownership is even rare. Now that's exactly what gives Lumina its scarcity value and why it stands out in the entire Dubai landscape. Now if you want a generic office with average yields, sure, I can get you other ready or off-plan options as well. But if you're looking for a statement grade commercial asset built for next generation of global tenants, there comes Lumina. Again, I'll repeat myself. At Lumina, you're not buying a commodity, you are securing a statement asset. And just like we saw the Royal Atlantis, what once seemed expensive became a trophy asset, doubling and tripling in value just within a few years. You see, the most powerful investments are the ones that are irreplaceable. Because when handover comes, the demand outpaces the supply and the premium you paid becomes the premium you earn. So if you're building a portfolio that's built to last at this price as well, Lumina is underpriced for what it's about to become. So before we wrap up, I want to be very upfront with you because transparency is crucial when making big decisions. As with many off-plan investments, it's important to be aware of few key factors. Since Lumina's handover is scheduled on 2029, typical off-plan risks will apply, like potential construction delays or changes in market conditions that could impact short-term liquidity or returns. but these are risks common to all high quality developments under construction, not just Lumina. Second, while Business Bay is largely saturated and there are few comparable freehold commercial projects coming up in emerging business hubs like DFC 2.0 could bring new supply. Still, none of them will match Lumina's unique combination of scarcity, ultra luxury positioning, and prime Sheikh Zayed Road location. And finally, the broader macroeconomic factors such as global slowdowns, geopolitical events, or rising interest rates can influence commercial real estate demand and pricing across all real estate markets worldwide. Now, these external factors affect every investor, no matter the project or the city. But the key point to understand is that Lumina is not speculative. Having said that, the key point to understand is that Lumina is not a speculative mid-market development. It is backed by Omniyat, a developer with a proven track record for delivering architectural icons and premium projects. Its irreplaceable location, extremely limited supply, and ultra-luxury positioning puts it into a different league where the potential rewards outweigh the typical risks. So while every investment has risk, Lumina offers a calculated strategic opportunity designed for investors who are focused on long-term value and prestige. So all in all, in very simple terms, this is a rare, ultra-luxury freehold office tower in a prime Sheikh Zayed Road location built by Omniyat, a developer that creates icons, not commodities. And if your investment horizon is long-term and you want something that grows in value, delivers strong return, and elevates your portfolio with prestige, Lumina is not just worth considering, it might be the flagship commercial asset of the next decade. Because this is not just about square footage, as I said, it's about brand, legacy, scarcity, and long term performance. Some assets you buy to flip, but a few like Lumina you buy to own forever. So, if this sounds like the kind of opportunity you have been waiting for, get in touch with me. Let's talk about numbers and feasibility and how Lumina could fit into your portfolio. Thank you.